Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report for Thursday, July 13th, 2017. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. Right now, we're holding near the upper edge of the range at the moment after yesterday's squeeze ahead of the release of Janet Yellen's testimony. We had a nice continuation here where we held, and now we're holding near the upper edge of the range. One key level to watch here intraday is going to be 24.43 half. 24.43 half. That's been a key level since the beginning of June, and every time price has failed to hold above that zone, we've seen varying degrees of weakness. And so we're going to watch that same zone yet again, because every time price gets into the upper edge of this range, it's an opportunity to fade back toward the center of the range, back toward value. So again, typically speaking, the best approach is to fade new highs, fade new lows, and coming into 51.5 may still offer an opportunity to fade. But again, keep an eye on 24.43 half, because any failure to hold above that zone could lead to a move right back down toward the center and bottom of this range as price continues to trade within that trading range. If we take a look here at crude oil, you'll notice price has continued to hold that 43.76 key level. But as I mentioned before, this isn't normal behavior here the way we've seen recently, where we've seen some decisive turns at edges and some big time moves. Instead, price has been very slow to start. It has pushed in one direction and come quickly back in the opposite direction afterwards. So this is more of a tightly coiled pattern here that's developing. We may see more tests at the 43.76, and eventually, if stops are run there, that could lead to another round of weakness toward 40. Overall, defending 43.76 is the primary objective for bulls looking to squeeze into 48.76. But the short-term level to watch today is going to be 45s. That's what we mentioned the previous session, that due to this squeeze here, we could see a push right back toward 45s, and then holding 45s would be the objective for bulls looking to squeeze again. And so far, 2 days running, 45s have been the floor here. So that's going to be the intraday key level to watch. Failure to hold 45s rotates this thing back toward 43.76. Right now, holding that zone allows price to continue to test that previous month's close, which has been offered several times now on multiple tests. Above that zone could begin to squeeze. So keep an eye on those couple of levels. We also have here the NQ, which has had a nice squeeze here. Remember, we had very, very close encounter here with the lower edge of the May range, and then price started to squeeze above the previous close here. Our expectation was that we would likely see a move into 57.29, followed by a move into 5800 to 58.20.25. And so far we've reached that levels after the recent rally here the last couple of days. A very swift advance. But once we get up here into the 5800 zone to 58.50, this is a zone where bears have had control. And so now the expectation is that bears are going to look to reject this zone and fade it back toward recent support. That could take you back toward 5700 and perhaps as low as 55.50. Again, the expectation is that this trading range, this key range here, will continue to remain intact. So even if we do flow backward, we're likely to push back up and continue this pattern here, at least into the near-term future. So continue to keep an eye on this area up here. 58.50 was the complete edge, which was the bottom of this range. So we could see this thing go a little bit higher, but the objective here is to watch for signs of rejection, because that could signal a return back across the range. Acceptance above 58.50 obviously would test 59.07 half as the top of the range there. So we'll keep an eye on this as it continues to develop the rest of the session. Good luck and trade well.